When it comes to income-oriented investing and income-generating ETFs, names like JEPI, qyld, and even JEPQ. These are some of the ETF names that get thrown around quite a bit. And although many of these higher yield, covered called styled ETFs seem to have a lot to offer, the truth is that not all covered call ETFs are created equal. And the truth is, in my opinion, some of these higher yielding covered call ETFs are definitely worth investing into, and some of them I would never touch with a 10-foot pole. Now in this video, we are going to dig deeper into the JP Morgan JEPQ ETF, explore all that it has to offer, and explain why I recently purchased an extra $10,000 worth of this income generating ETF. Now we're going to go over all this and more in this video. Right after you please drop a like in this video and subscribe for more content like this. So as you can see, I recently purchased 210 shares of JEPQ at around $47.70 for over $10,000. And this is in one of my long-term dividend growth portfolios. Now stick around until the end of this video because I'm going to explain exactly why I purchased so much of this newer income-focused ETF. But first, let's dig deeper into what JEPQ is and what this ETF has to offer. So over here on the JP Morgan Asset Management website, it says JEPQ Nasdaq Equity Premium Income ETF. And the fund's overview is pretty simple. It says that JEPQ generates income through a combination of selling options and investing in US large cap growth stocks, seeking to deliver a monthly income stream from associated option premiums and stock dividends. This fund also seeks to deliver a significant portion of returns associated with the Nasdaq 100 index with less volatility. Now lastly, this fund constructs a long equity portfolio through proprietary data science driven investment approach designed to drive the portfolio allocations while maximizing risk adjusted expected returns. Now what's kind of cool about this is they actually have the entire investment process laid out on the JP Morgan website. So in more detail, it says that applied data science processes utilizing 40 plus years of JP Morgan proprietary data to create a fundamental framework for security selection and portfolio construction. That's number one. That's the underlying equity portfolio portion of this entire investment strategy. Now with that, an option overlay. When it comes to options, 1 month out of the money call options designed to generate income and give investors a portion of the upside with reduced volatility. And with this, it equals JEPQ, a well-represented, fundamentally driven Nasdaq 100 strategy that seeks to provide clients with a monthly distributable income via option premiums and dividends. Now some more facts about JEPQ. The fund has only been around for about a year and already has over $3.4 billion in assets under management. The fund's price is actually down since inception around 1.14%, so pretty much back to where the ETF started around a year ago. Now JEPQ's expense ratio is pretty much industry standard, or even maybe on the lower end for covered call ETFs for at least what I've seen, at a 0.35%. So this ETF does charge you quite a bit more than something like SCHD, but of course it's because the strategy is much different and more hands-on. Now here we have the most important portion of this ETF, and this is exactly the reason why I've been purchasing tens of thousands of dollars worth of JEPQ as of recently for my long-term dividend growth portfolio. It's because of the holdings breakdown and also the top 10 holdings, which we'll go over right now. So looking at the top holding breakdowns, JEPQ has technology at almost 51% of the entire fund. Now in comparison, for example, JEPI, JEPQ's brother or sister, has only 17.34% of their entire breakdowns in technology. So you might be asking yourself, well, what's so special about technology and why does JEPQ have so much of its overall holdings based in it? Well, the great thing about tech stocks in general is that they're known to potentially deliver significant growth. With technology advancements and innovations that are continuously going on, there is crazy opportunity in the market to make a lot of money and some major moves in the technology sector. Now with the JEPQ ETF being so heavily invested in technology, it is definitely going to have a much higher beta. Now market beta, also known as systemic risk or equity beta, is a measure of a stock or portfolio's sensitivity to the overall market movements. So beta is a commonly used term as far as risk indicator. A beta of 1 indicates that the asset or portfolio tends to move in line with the overall market. If the market increases by 1%, the asset or portfolio is expected to also increase around 1%. Now with JEPQ's holdings being majority technology, that means that this ETF is going to have a much higher beta, again, compared to something like JEPI. Now this can definitely be a good thing, of course, when the market moves up. But when the market moves down, once again, something with a higher beta than 1 is also going to move down more significantly. But with JEPQ's top 10 holdings being things like Microsoft, Apple, Alphabet, Nvidia, Amazon, Meta, and Tesla, This ETF's holdings might have a little bit more risk as far as downside, but the upside potential in my opinion can be much larger. And when it comes to JEPQ, the upside is not only from capital appreciation, JEPQ also does pay a massive dividend on a monthly basis, or at least it has historically speaking. The most recent dividend from JEPQ was 36 cents per share. The one before that was 48 cents per share, 45 cents before that, and since inception, JEPQ's pretty much paid around the high 30s to around 50-60 cents per share per month. Now with the previous dividends paid, this gives JEPQ a 11.8% trailing 12-month dividend yield, which is obviously very hard to find a dividend yield even near that. So because of JEPQ's potential for massive capital appreciation in the future, because of the higher beta, high quality basket of holdings that this ETF has, and on top of that, the significant consistent dividend that JEPQ has paid since inception, this ETF for me personally is a perfect staple to have in my long-term dividend growth portfolio. Now, if an investor, not like myself, is not all that interested in getting paid on a monthly basis and wants to invest into an ETF with higher overall growth potential, well then JEPQ might not be the right investment vehicle for you. But for the investors out there, like myself personally, that are looking for a high quality ETF with rock solid holdings that pays a great dividend on a monthly basis and also has the potential for some massive upside, JEPQ is definitely an ETF worth looking into. Now lastly, I know what some of you might be saying. Well, JEPQ does pay an awesome dividend and seems to have an overall pretty decent strategy, but how has JEPQ performed since inception? Well, at least over the last year, over the last 365 days, and with the metric total return, which means price increase of the ETF price plus dividends included, JEPQ has returned 19.44%, where the SPY, the S&P 500, has returned 18.10%. So obviously JEPQ has performed quite well, especially in the last month or so, because the overall technology sector has been doing very well. And if and when there is a point in the future where the technology sector starts to sell off and really moves down in price, JEPQ will be affected by it. And this is of course because JEPQ's overall holdings are so significantly portioned with technology. But even still, with JEPQ's covered call option strategy, the future potential downside, if there is a technology sell-off, will at least be partially managed because of the overall covered call strategy. I want to hear what you guys think down below when it comes to JEPQ. Do you agree or disagree with me that JEPQ is a great staple for any long-term dividend growth investor that seeks to generate income on a monthly basis but also wants the potential for capital appreciation? If you enjoyed this video, make sure to please drop a like on the video and subscribe for more content like this in the future. Thank you as always for stopping by, and I'll see you in the next one.